So let's take a little deeper look and define these. What is revenue? Revenue is income. It's what goes on your income statement in your financial report. It's the recognizable revenue period, revenue for the reporting period, and it is the aggregation of the recognizable revenue for each contract element. So if you were mentally to flip back to the slide with the revenue schedules in the little green boxes at $10,000 a month or $5,000 a month, the revenue that you report is what is recognizable to date. So if it's a $120,000 contract, July 1st, there's zero revenue. On August 1st, there's $10,000 on revenue. On September 1st, there's $20,000 of revenue. Okay? Revenue is not the bookings. It is not the invoice. It is what is recognizable out of the revenue recognition schedule. So what the heck is deferred revenue? Deferred revenue is a balance sheet item. And conceptually, it's not all that hard to understand if you take a step back. What deferred revenue is the excess of what you've invoiced over what you could recognize. So on your balance sheet, let's take our example of the $120,000 invoice that we sent out for that first contract. That invoice will either show as accounts receivable on our balance sheet, or maybe it was paid right away, and now will show as cash. The deferred revenue number helps people to understand that there is an ongoing obligation, that you've collected money or you're going to collect money for something that you haven't been able to recognize yet. So it's the difference between what you have invoiced in excess of what you should be able to recognize. A month into that, your deferred revenue balance, let's say you invoiced $120,000 on August 1st, your deferred revenue balance is $110,000 for that particular contract element. Now, what makes this a little more complicated is the deferred revenue calculation is done at the contract level, not at the element level. So you look and you say, well, let's look at our contract. What revenue across this contract is recognizable, and what will be invoiced across this contract? And we determine whether it's deferred revenue or not, and then we aggregate those and put them in our balance sheet. The corollary to that is the unbilled AR, unbilled accounts receivable, and it's very simple to understand. It's everything I just said except you flip it around. It's what have we been able to recognize over what have we forgotten to invoice, for instance. So we have revenue that we could recognize, but we haven't invoiced yet. And once again, this is calculated at the contract level and then aggregated and placed into the balance sheet. Okay. Again, don't want to go into the nitty-gritty details that I had to learn to help build a SaaS Optics product and business, but important to understand that you do this calculation at the contract level for each one, and you decide whether a contract is in one bucket or the other, and then you aggregate them. You don't offset them. Okay, so if you have a lot of contracts, you likely will have both deferred revenue and unbilled AR calculations. So with that, let me take you in, just show you in SaaS Optics, for instance, how these things manifest themselves in a system. Now, SaaS Optics does all this stuff for you. And by the way, QuickBooks doesn't have any ability to do any of these calculations automatically or store this information or generate this information for you. You can store it in QuickBooks, but to generate a deferred revenue, you have to go to Excel spreadsheet if you're using QuickBooks. Same thing with unbilled AR. And revenue schedules don't exist in QuickBooks. QuickBooks is an invoicing system. It's just one of the components. So there are products out there. SaaS Optics is one that can help you. There are many other products in the marketplace that do financial accounting and recording. They typically are very expensive. Products like NetSuite, Oracle, SAP, Intact, SoftTrax. These are systems that are going to cost you hundreds of thousands of dollars in license fees and even more to implement. So we have SaaS Optics. It's designed to kind of fill in for early stage companies as a way to get this much more efficiently. Let's flop over and just take a look at how this information is represented in an application. All right, so here we are over in SaaS Optics. We're going to take a look at our example. I put a name to it, in this case, Brand Maker Inc. This is actually one of the companies that I'm involved with. It's a marketing automation platform, great company. And we're using them as our example to hold our contract transactions here. So we have one contract and we have our 3 contract element transactions from our training. You can see them down below, the start date, the end date, the amount. Okay, and there are other things going on the screen. This is not a comprehensive review of SaaS optics. We're going to focus on just these core concepts here. The core concepts are we have these transactional elements, we have start dates, we have the amount. Let's go take a look at the first one, which is our term subscription. Again, you've got our start date, end date, and our value. Okay, you have all kinds of other things here. Again, normalized value used in the generation of certain metrics like monthly recurring revenue. Let's skip all that for now and just go down to the bottom. At the bottom, we see our revenue schedule. Here we have $10,000 a month over the 1-year period, and you can see how it's recognized. So for this, again, for this contract element transaction, it's a $120,000 transaction. Here is our revenue schedule. Now, we also can look at the invoices. We'll click on this, and we'll have to scroll back down because the screen has information at the top. So here again is our transaction, but we flip the bottom tab, so to speak, and now we're looking at the invoices. Again, this transaction had a single invoice for $120,000 made on July 1. So contract element, independent revenue schedule, independent invoices, or separate data, I should say. We go back to our contract. Let's open up the license and look at it because it had the kind of cool scenario of the revenue schedule going way out into way past the date. So here's our license transaction. It starts and ends on July 1st. It's $60,000. And here's our revenue schedule. It's a 2-year revenue recognition schedule, $2,500 a month over a 2-year period. And remember, this is the transaction we agreed to invoice the customer quarterly for the first 4 quarters. Okay. Now, if we go back to the contract, we'll take a little deeper look at some of the information here. Across this contract, we have $216,000 of transactions. This is the value of our contract elements. It's $216,000 of revenue, and we've actually put in, at this point, $216,000 of invoices. We have only $61,000 of revenue recognition to date. It's mid-August 2011. In this example, the thing started July 1. And remember, there's a revenue recognition schedule. So that makes sense that you would only have a portion of the 216 recognizable to date. So here is the relevant information for this contract with regards to these key financial terms. Okay, we can look at it in a slightly different view if we go to the customer name, customer link here, and we can look at the revenue summary information, and we can see it in a tabular form below. Same information presented differently. Now, I point this out because this is done at the contract level. If this customer had 2 contracts, you'd have a line item for each contract. For any contract, you can have a positive deferred revenue number or a positive unbilled AR number, but not both. You could have 0 in both, but you wouldn't have 92 here and 10 here, or 50 here and 30 here. It's one or the other, and that's because you calculate deferred revenue or unbilled AR at the contract level. So again, if we had multiple contracts, this may be positive, and then we'd have none, or vice versa. Now, as your business grows, you'll have to start looking at these things across many contracts. So we report in SaaS optics like this. Here is a report that we run that shows you the same information, and now we have the brand maker information that we just looked at inside of a report along with all of our other customers and contracts. Now, if you don't use SaaS optics and use a spreadsheet, you're going to have this type of information in an Excel spreadsheet. Okay, as you can see, it becomes a pretty complicated spreadsheet over time, which is why over time people will move away from QuickBooks and spreadsheets, and they'll buy an Oracle, or they'll buy a SoftTrax, or they'll buy a NetSuite. Those systems provide all of these calculations and revenue management tools, whereas QuickBooks doesn't do revenue recognition and calculate deferred revenue for you. You have to do it on your own in a spreadsheet, or you can use SaaS optics, or if you can find another product in the market. We're not sure that there is another one, but if you can find another product, you still need to do it outside of QuickBooks. And then when you get large enough, or when you really want to look at things for the month or quarter, you have a finance summary level, where here what we're looking at is the information aggregated per period across everything. So we're going to look at our recognizable revenue for August 2011 across all of our contracts. And here we can see the revenue for the period, the revenue to date, the unbilled or unrecognized revenue balance we're carrying forward, what we've invoiced for the period, what we've invoiced to date, and then down at the bottom, our deferred revenue and unbilled AR numbers, both the status of them and then the change. The change is important because it's the calculation that gets journaled into your QuickBooks from period to period so that your balance sheet in QuickBooks has the right amount. Typically in QuickBooks, you're not going to keep a deferred revenue calculation at the contract level because QuickBooks doesn't understand the concept of a contract. So in QuickBooks, if you're using QuickBooks and you're doing your financial reporting in QuickBooks in parallel with your tax reporting, you'll put these types of entries in, or your accountant will put these types of entries into your balance sheet to make adjustments from month to month or quarter to quarter so that you have the right deferred revenue and the right unbilled AR numbers in there. By the way, they'll also use this to generate your revenue. They won't use the go get the income from the income report that's standard, because that is generating income from invoices. And what you really need to do is generate income from your recognizable revenue. So that's it. Hopefully that was valuable to you. Again, didn't try to make you an expert. There's a lot of substance here. I think if anything, what this should indicate to you is you need to find good financial advisors. You need to understand the concepts. You need to begin to work towards understanding them in more detail as your business grows, so that you can inevitably have a discussion with a finance person, be it a venture capitalist, a banker, or an acquirer. Those people speak finance, they speak deferred revenue, they speak revenue growth. They don't speak necessarily, or they don't isolate their conversations to metrics like bookings and churn and things that you're going to be probably more familiar with. They speak these things. They speak EBITDA and a whole bunch of other finance terms. So, learn from my mistakes early on. I had a great education and learned a lot of things in my first couple of jobs, and did a pretty good job running my software companies. But when I went through my first acquisition, I did not understand finance at all. And, it would be fair to say it hurt my credibility and dragged the conversations on a little bit longer than they should have. So, again, thanks for your time. Also, feel free to visit SaaS Optics. We have a huge encyclopedia of information about metrics. Of course, you're more than welcome to share information about the product with you, but we have lots of information about how to calculate churn, how to calculate various financial numbers and various financial metrics specifically for SaaS and subscription businesses. And it's all there. It's all free. Thank you.